ஹலோ, கேக்குதா? ஆ, ஓகே. ஹலோ. Yeah. ம். Yes, sir. Okay. Hi all. Good afternoon to everyone for attending the today's session, paper 4, Business Economics for CAI Foundation. And today's session we are going to discuss some important concepts and previous two sessions in out of 10 chapters, 5 chapters we have completed to cover the entire syllabus. The rest of the chapters we are going to discuss today. So paper 4, Business Economics. For today's session, chapter 6, determination of national income. So according to the definition of Fisher, he defines national income determined by not by its annual production but by its annual consumption. So from this definition, we can able to identify the national income is defined by Fisher. Important question for your examination. And he defines the most important concept about national income determined not by its annual production but by its annual consumption. So with this, very easily you can conclude that instead of annual production, they are giving more importance on annual consumption. The consumption which determines to improve, to increase the national income of the country. So how to measure this national income? For that there are various factors which influence into measure the national income. So in such a case, we are going to see one by one what are all the factors which influencing are to use in order to measure the national income. So here measurement of national income. First one is conceptual framework. In this conceptual framework deals with complete accounting for two important subdivisions. One is to analyze, another one is to evaluate. So here what to analyze, what to evaluate, and whether it for short run as well as for long run. The another important concept to analyze here. Okay, with the help of conceptual framework, it deals with a complete accounting to two subdivisions. One is analyzing, another one is evaluating. But analyze and evaluate what? Short run performance of economy. So it deals with the short run performance of economy. And point number 2, economic activities. So what economic activities to be included in order to measure the national income? All human activities. All human activities used to include in order to measure the national income, especially all human activities. One is create goods and services, another one is exchange in market, plus valued at market prices. So in this second point, economic activities, which represents dash all human activities. So another important point, all human activities means, now you may have doubt, sir, what type of activities to be included to measure the national income means? Point number 1, to create goods and services. To create goods and services means the production is very much important, as well as exchange in market, the factor cost as well as the market price is very much important, and how these factor cost as well as market price to value the certain goods and services with regard to market price in the market, which also to be taken into account for the purpose of calculating the economic activities to measure the national income. So this point, which represents the second most important heading to measure the concepts of national income. Third point, flow concept. The flow concept means it is used to measure the value of output. So value of output means, so what type of output, whether intermediate or final. Always to measure the final output to be taken into account, final output of goods and services. So for this, flow concept measures the value of output, measure the value of output, and value of output means what type of output? Final output of goods and services. Next important point is current production. For this current production, the value of same way goods and services produced in current period, it means a year only. So the next point is current production, which represents the value of goods and services. which represents the value of goods and services in what period? Current period. Current period means to measure the concept of national income, which will be add on or to applies only for the current year only, not for the previous year. So every time whenever they are going to calculate the national income to measure certain value of goods and services, so those goods and services which will be applicable only for current year period, not for previous year, and at the same time only for final goods and services, not for intermediate goods and services. The next one is capital versus other goods. Capital goods called fixed asset, plant, equipment, etc. by business firm. Other goods called as non-capital goods. So for these non-capital goods, goods and services, for these goods and services demanded individual or household as well as business firm. So there are two types of goods. One is capital goods, another one is other goods. Other goods which represents non-capital goods. So now fixed assets, plant, equipments by business firm. So people, those who are engaging in doing the business and involving these type of assets called as capital goods. Another one is non-capital goods. Non-capital goods means goods and services demanded either by individual or household as well as business firm. Other than capital goods is called as non-capital goods. So this part is very much important to analyze the difference between the capital goods and non-capital goods. So which are the various types of goods used comes under the category of capital, and for what purpose we can call the non-capital goods or else other goods. So the next important point, money measurement. Money measurement. So which one is used as a base to measure the concept of national income means only money. But even for this, the money value of annual output, example, adding up of value of different sorts of goods and services produced in a year. Say for example, tons of rice, the tons of rice. So here they used to express the value of money with regard to the quantity, especially rice, with the help of tons. It is called as money value of annual output for the different sorts of goods and services. Say for example, cotton, then they used to measure with the help of bales, how many number of bales which is required to produce the cotton. So for that, how much value can be fixed for each bale? So here, which one is plays a major role to measure the national income means only the money. So likewise, the conceptual framework, complete accounting. Point number 2, economic activities means to create goods and services. To create goods and services, exchange in market as well as value at market price is required. Then third point, the flow concept. Flow concept deals with only the final goods and services. Then current production. This national income used to measure only for the current year production, not for previous year. Then there are two types of capital goods. One is the two types of goods, capital goods as well as other goods. Capital goods, which represents fixed assets, plant and equipment used by the business firm. But other goods also called as non-capital goods, which are demanded either by the individual or household or by the business firm, is called as the non-capital goods. Then the last one is money measurement, how they used to measure the money. Here money is the basic measurement to measure the national income, but for that every add up of value of different sorts of goods and services. So that's why to calculate, to measure exclusively with the help of money measurement, let have given one important point, either with the tons of rice or with the cotton, bales of cotton, how much amount of bales are required for the purpose of producing the cotton, how much amount of money can fix for each bale. These are the points to be concluded for the calculation of money measurement with regard to the concept of national income. Then methods, examination point of view, very important. The methods to measure national income. Point number 1, there are 3 methods are there. One is production method, another one is income method, and the third one is expenditure method. So totally how many methods are there in the national income means there are totally 3 methods are there for your examination. Point number 1, there are 3 methods are involved to measure the national income. Point number 2, what are 3 methods? Production method, income method, expenditure method. Product method, income method, expenditure method. So these 3, product, income, expenditure, 3 methods are involved in order to measure the national income. So first method, product method. In this product method, again very much important points that you can expect for your examination. Precautions. Okay, while calculating the product method, what are the precautions to be taken, especially with regard to measure the national income? Point number 1, in this product method, point number 1, problem of double counting. So double counting, precautionary measures to be taken with regard to double counting. Point number 2, value addition in particular year only. Value addition in particular year. It means that the previous year, if they are going to add, this should be ignored. So only the present year to be taken to calculate the national income under product method, previous year not to be included. Point number 3, stock appreciation. So stock appreciation also to be deducted stock appreciation, this one to be deducted from value added since there is no real increase in output. Example, last year 2022 there are 10 units are left. In 2023 50 units. In case if you are going to add these 10 units, these 10 units not to be included, means these 10 units already produced for previous year, not for the current year. So here stock appreciation to be deducted from value added. In case if they are given 60 means, then 10 to be deducted and to be represented with the actual value only. The reason is this 10 they have already shown the stock not for the current year, for the previous year. Previous year means, as I already mentioned, value addition in particular year alone to be added, value addition for the previous year to be ignored. So this point to be taken into consideration as well as the precautionary measure while calculating the national income under product method is very much important. Production for self-consumption. Even production for self-consumption also counted. Sir, why is production for self-consumption also counted? There is a question mark. Why it is required to be counted under product method to measure the concept of national income means? The reason is, due to valued at prevailing market price. So here production for self-consumption, even if a person is going to use the goods for the self-consumption, but at the same time those goods to be valued at what price means? Market price. So as I already mentioned, with regard to measurement of concept of national income, there is one important point, the market prices, the factor cost as well as the market price to be included for the measurement of national income. Same way here also production for self-consumptions to be taken into account. So what are all the various measures to be taken, especially to calculate the product method means? First one, problem of double counting. First one is problem of double counting, okay, and value addition in particular year, stock appreciation and production for self-consumption. These are all the measures to be taken into account to calculate the methods of national income with regard to product method. Now the next most important method is income method. Next one is income method. So this income method, what are the precautions to be taken? First precaution is transfer payments. Transfer payments, the gift, donation, scholarship, indirect tax. So under income method, especially transfer payment, example gift, donation, scholarship, indirect taxes, all these not to be included. So all these not to be included, mark it as important point. So the precautions, especially with regard to precautions under these three types of methods to calculate the national income, any of the precautions you will expect for your examination. Either under product method they will ask the question, or else income method, or else expenditure method. So first one is transfer payment. Second one under income method, illegal money. Second one is illegal money earned. One is smuggling, another one is gambling. Now, any illegal money earned either through smuggling or gambling. Now the question mark again, whether this can be included or not to be included. Even here under income method, to calculate the national income, these two, illegal money not to be included. This is another important question for your examination. Again, not to be included illegal money as well as the transfer payment, both used to come under dash method, means income method. Stock appreciation used to come under dash method, means product method. Problem of double counting, the precautions to be taken under dash method, means product method. Production for self-consumption applicable under to the precautions to be taken under production for self-consumption used to come under dash method, product method. So like this they will ask the questions. Illegal money. Third one, windfall gain. Windfall gain, third point. Either prizes or lotteries. Sir, already you have told two methods, the two important points, precautions to be taken. One is transfer payment. Okay, there you told already not to be included. Okay. Illegal money, again for illegal money, smuggling and gambling not to be included. Okay. Again, sir, what about the windfall gains? Here you have mentioned prize and lottery, whether at least these prizes and lotteries under income method to be included or not to be included, means again same point, not to be included. So there are 3 points we have discussed under income method: transfer payment, illegal money earned, and windfall gain. All these three, there are various subdivisions are there, either gift, donation, scholarship, or smuggling or gambling, and prizes are lotteries. All these are the examples used to commonly comes under the income method, but at any cost, one point which is very much important, precautionary measures to be taken, whether to be added or not to be added, means it shall not be included to calculate the measurement of national income. Receipt from sale of financial assets. Example, shares as well as bonds. So whether this receipt from sale of financial assets can included or not to be included, even this not to be included. So why this one is not to be included? Any other reason is there for the purpose of not to be included? Means yes, because these are the items, especially shares and bonds, okay, they are not related to generation of income in current year production of the goods. So as I told already, this national income which is exclusively used to calculate for the purpose of current year, but the shares and bonds which are related to previous year, continuously people used to hold those shares and ready to buy and sell the shares. So it is not very easy to accurately to calculate whether the people those who are holding the shares for the present year or the previous year. So for that purpose it shall not be included, especially with regard to receipts from sale of financial assets on what? Shares and bonds. So how many points we have discussed under income method? Means point number 1, transfer payment; point number 2, illegal money; point number 3, windfall gain; and point number 4, receipt from sale of financial assets. So there are 4 points we have discussed under income method, but all these 4 points while calculating the national income to be taken into account, whether to be calculated or not to be included or included, means there are certain various methods what we have discussed so far. Okay, hope you understood. For income method as well as product method, there are various precautionary measures to be taken, and all the precautionary measures so far what you have discussed, one basic point, it is common to be applicable, not to be included. Then the next one is expenditure method. Next one is expenditure method. So for this expenditure method, again precautions. Point number 1, second-hand goods. The reason is why these second-hand goods included or not included, means these second-hand goods also not included. So what is the reason? What for it is not to be included, means these second-hand goods at any cost they are not going to contribute to current year production of the goods. So that's why it is used to come under not included. And again point number 2, purchase of old shares and bonds, not included. Sir, why even this one is not included? Same point, due to the reason of these shares, old shares and bonds, which are they are not going to represent for current year, only for previous year. So again not included. Third point, expenditure on transfer of payment. Example, old age pension. Okay, even this one not to be included, since there is no productive services, no productive services rendered. So like this, second-hand goods not included, purchase of old shares and bonds not included, expense on transfer of payment not to be included. So all these points to be taken into account for the calculating what method, means expenditure method. So there are various precautionary measures to be taken on 3 important methods. One is product method, another one is income method, and third one is expenditure method. Now here the next important point, income method. In income method, one important point to analyze, GDP. So people of a country who produce GDP. GDP is nothing but gross domestic product. The meaning of GDP, the total value of goods and services produced within a country during a year. Therefore GDP at what price means market price. But now we are discussing here the GDP during a year receive income from their work. But for that purpose, this income method which represents 4 points. One is wages in salaries, rent, interest, profit. So all these 4 called factors: land, labor, capital, organization. For land, parent, labor, wages, capital, interest, organization, profit. So income method deals on factors of production: land, labor, capital, organization, and the people, those who are engaging in producing any goods, through that the income what we are receiving, especially for that specific year, called as gross domestic product. But for this gross domestic product, the income where we are going to receive with help of 4 important aspects which we need to discuss on income method. One is wages and salaries. This wages and salaries is nothing but compensation of employees. And the next one is rent. Third one is interest. Fourth one is profit. So here GDP, the meaning of GDP, gross domestic product. What is the exact meaning of gross domestic product? Goods and services produced within a country during a year, especially gross domestic product at market prices. And what about expenditure method? Expenditure method: C plus I plus G plus X minus M. Again, important question for your examination. C for consumption, I for investment, G for government expenditure, X minus M, export minus import. Therefore, net export equal to export minus import. So what is the formula to calculate the expenditure method? Means consumption, investment, government expenditure, X minus M is nothing but export minus import. Net exports equal to exports minus import, used to come under which method? Means expenditure method. So there are 3 methods: product method, income method, and expenditure method. But above all, what you have discussed so far, so which one is very much important? Means formula to calculate the national income. So there are various formulas, okay, at basic level. I will list out the formulas, but you will expect to calculate either any of the formulas, either on GNP at market prices or GDP at market prices or factor cost. You will expect one question, practical question for your examination. So formulas are GNP market price equal to GDP market price plus NFIA, called net factor income earned from abroad. So X is a person, one a citizen of our country, one who went to abroad. If he earned, or if he is doing any restaurant, is doing the business, restaurant business, through that what he had earned, that income may be calculated for the national income. Means yes, that income can be included to calculate for national income. Okay, that concept is called as NFIA, net factor income earned from abroad. Same way, an NRI, one who came to our country and he is engaging in doing the business, what he earned through his business, especially the production business or the services, what he earned, whether this amount can be included for the purpose of national income of our country, means no. So NRI, whatever he is doing the business in our country, the income which goes to his own country, but not it belongs to our country. Same way, citizen of our country went to other country, and if he earned some amount of money, whether that amount can be included as a part of our country's national income means yes, called as net factor earned from abroad. Now GNP factor cost. So GNP factor cost equal to GNP market price minus indirect tax plus subsidies. Subsidies nothing but these subsidies which will be provided by the government. Factor cost factory, land, labor, capital. So within the factory, the subsidies which will be provided by the government. So that's why you are adding the subsidies. But at the same time, once the production gets over, where you have decided to promote that product in the market, then you have to pay the GST. But for that, indirect tax that you have to deduct. So practically try to understand the concept why we are adding the subsidies to calculate the factor cost. Means factor is nothing but, as I told, factors of production, land, labor, capital. But for that, for the purpose of production for any factory where the government is engaging in providing the various subsidies in order to increase the production, especially to encourage most of the people to engage in doing the export business. But for that, subsidies which will be provided by the government, hence we are adding it. But at the same time, once the goods gets completed, those goods to be promoted to the market. But for that, you have to pay the GST. So there is no other way. While paying the GST, it is used to come under indirect tax. That's why we are deducting the indirect tax. The next one is NNP, called net national product. This one, gross national product. At what price? Market price. Here net national product. The net national product formula, market price. Same way, gross national product market price minus depreciation. Then net national product factor cost equal to net national product market price minus same indirect tax. Here we are discussing on gross national product factor cost. Just opposite, net national product factor cost. Here GNP market price, NNP market price, but concept is same, minus indirect tax plus subsidies. But for examination point of view, the NNP market price is always higher than NNP factor cost. Sir, why and how the NNP market price is higher than NNP factor cost? The reason is, indirect tax always exceed subsidies. So NNP at market price. In market price, what you have to do? You have to pay the indirect tax to promote the product in the market. So that's why this NNP market price is always higher than the NNP factor cost. Even for factor cost, to calculate the NNP factor cost, the subsidies which provided by the government is less. Instead of that, where the person is ready to pay the GST, indirect tax, which is higher. So that's why NNP market price is always higher than the NNP factor cost. Same way, second point, NNP market price is less than NNP factor cost. Just opposite, government subsidies exceed always when comparing to the indirect tax. In such a case, even NNP is lesser than NNP factor cost. So both in reverse strategy, where I have explained, but only one thing, net national product market price is always higher than the net national product of factor cost. The reason is, indirect tax used to exceed always when comparing with subsidies. So till here, what you have discussed is called as national income chapter. So what is the meaning of national income? What are the various factors which influencing the measures of national income, measurement of national income? And the third point, what you have discussed, what are the various methods presented to calculate the national income? Income method, product method, and expenditure method. Product method, income method, and expenditure method. So what are the precautionary measures to be taken in calculating all these three methods? And at last, the methods to measure GDP for income, expenditure factors, and product method, agricultural, allied services, manufacturing services, then business services, all these are used to come under product method. So like this, there are three methods which are very much important to calculate the national income, but for that there are various formulas: gross national product at market price, gross national product at factor cost. Same way, net national product at market price, net national product at factor cost. If you understood the basic concepts of NFIA, why we are deducting the depreciation, why we are adding indirect taxes, why we are subtracting the subsidies, these are all the practical concepts which I have explained just now for you to understood. With this, we will conclude the concept of national income. In case having any questions, please post your questions in the chat box. The next one is Keynes theory of determination of national income. See, in this Keynes theory formula, for examination point of view, aggregate demand equal to C plus I. C for consumer goods, I for investment goods. Then the next one is consumption function. So what is the formula for consumption function? C equal to A plus B Y. Again, another important question, the formula to calculate the consumption function. And third one, investment function. S equal to Y minus C. S is nothing but aggregate saving, and Y equal to disposable income, then C equal to aggregate consumption. But here one important point I have given, disposable income. Now just see, under this Keynes theory, under this Keynes theory, first we need to identify under the Keynes theory of national income. Theory is nothing but employment as well as income. There are three models are presented. One is, three models are presented under this concept. Three models are presented. One is two sector model, household and business sector, called as two sector model. Same way, if you add another one, government, household, business, government, then three sector model. Same way, if you add foreign, household, business, government, foreign, four sector model. So two sector model, it's two. One is household and business. Three sector model, household, business and government. Four sector model, household, business, government and foreign. So this point is important. The number of sectors presented in the determination of national income. So who is the author for determination of national income? Just now I have explained J.M. Keynes. Again another important question, J.M. Keynes, one who defines or explains the concept of theory of determination of national income. So there are various concepts are presented. One is consumption function, important, okay, and another one is the investment function. Formula for investment S equal to Y minus C, especially Y is nothing but disposable income. So here we need to know what is the meaning of disposable income. Again, another important point, the meaning of disposable income. Income which is left with the individuals after paying the tax to the government. The formula personal income minus tax. Now what is the formula for the disposable income? Means personal income minus tax. Same way, again you may have doubt, sir, personal income, okay, what is the formula for personal income? Personal income formula is private income minus undistributed corporate profit minus profit tax. So this one called as what type of income? Personal income. Again here I mentioned private income. Now again you may have doubt, sir, what is the formula for private income? The private income equal to national income, or with this NNP at factor cost plus transfer payment plus interest on public debt minus social security, then profit and surplus of public undertakings. Now just see here, in this Keynes theory, already I have told who explained, J.M. Keynes. It is one important question. How many sectors are there? 2, 3 as well as 4. So 2 sectors deals with household and business. 3 tier sectors deals with household, business and government. Then 4 tier sector deals with household, business, government and foreign. Aggregate demand. What is the formula for aggregate demand in Keynes theory? C plus I. So what is the meaning of C plus I? C plus I deals with consumer goods as well as investment goods. What is the formula for consumption function? C equal to A plus BY. Investment function, S equal to, S is nothing but aggregate saving. Y minus C, Y disposable income. In this there are 3 types of income, very much important for your examination students. What are 3 types of income means? Point number 1, disposable income. From the personal income, if you deducted tax, what amount is left is called as disposable income. Again, the another income will start here since you have mentioned the personal income. So what is the formula to calculate the personal income? Personal income equal to private income minus undistributed corporate profit or profit tax. If you deducted, you will be getting the personal income. Third point, again, since I mentioned to calculate the personal income, private income, again you may have doubt. Sir, what is the meaning of private income? The national income or NNP at factor cost plus transfer payment, interest on public debt minus social security as well as profit and surplus of public undertakings. If you deducted, what you are getting balance is called as private income. So what are 3 major sources of income which is required to be presented while calculating the national income? Means private income, personal income as well as disposable income. So in this Keynes theory, the another most important concept is MPC and MPS. MPC and MPS. So here MPC is increase in consumption, means every unit of increase in consumption in disposable income. Therefore MPC equal to B equal to change in two things, change in consumption and change in income. Now just see here the formula MPC, change in consumption, increase in consumption, every amount of increase in consumption in disposable income. So for this disposable income, already we have already we have arrived the formula. Okay, we have discussed about the disposable income formula. The meaning of disposable income is nothing but income which is left with the individual after paying the tax. So what is the formula to calculate the disposable income? Means personal income minus tax, the balance called as disposable income. So this formula is very much important. Same way, what is the formula to calculate MPS? Increase in saving for every unit increase in disposable income. So therefore MPS equal to change in saving divided by change in income, or 1 minus MPC. Here MPC, which represent marginal propensity to saving, marginal propensity saving. Here marginal propensity to consume called MPC. So there is a difference between MPC and MPS. So in this concept, the MPC and MPS with regard to formulas, at least one question you will expect for your examination. So practically you need to know how to calculate the MPC and MPC. Okay, MPC and as well as MPS with regard to the formula for both. It is very much important question for your examination. And other rest of the points, what is the formula for aggregate demand and investment function, as well as the consumption function, and who defines the theory of income determination. All these are all the basic important one word questions where you can expect for your examination. The next unit is money. So in this concept where we are going to discuss some important points, the demand for money. Demand for money, one is liquidity, another one is demand to store value. So these 2 points are basic points which we need to understood for demand for money. One is liquidity, so easily can able to convert it into cash. Some people where they will show the interest to to save or to analyze the value with regard to money. But for that there are various factors. So, okay, factors means one is quantity of money, or how much money people would like to hold in liquid form. Now just see here, how much quantity of money or how much money people would like to hold in liquid form. Here first objective. Okay, demand for money, one is liquidity, another one is store value. But for that to analyze, there are various types of theories have been enacted. Theories. So here you will expect some questions for your examinations. Point number 1, quantity theory of money. Quantity theory of money. What approach? Quantity theory of money, classical or Fisher approach. Then cash balance approach. For this new classical or Cambridge approach. Liquidity preference theory. Liquidity preference theory, but for this Keynesian theory. So these are the various theories are applicable. Not only these theories, even inventory approach, Baumol. So like this, there are various types of theories are applied here to calculate the money. So quantity theory of money. So what is the formula? With regard to formula, you will expect the questions. Quantity theory of money equal to price into T. It means price, level of price level multiply by total volume of transaction, this which represents T and this which represent P, equal to supply of money. Therefore MV plus M again V, supply of money. So what is the formula to calculate for demand for money? It's nothing but P into T. P is called as price level and T is called as total volume of transactions. How many number of transactions where you are going to execute to complete one transaction. So the number of volume of transactions which is used to calculate the expressing the value of quantity theory of money. Here Fisher equation also very much important. The MV equal to PT. So MV equal to PT, M which represent total amount of money in circulation, V which represent transaction velocity of circulation, then P which represent total number of transaction, T which represent MV equal to PT, this T which represents total value of transaction and P which represent average price level. So this formula, M equal to total amount of money circulation, V equal to transaction velocity of circulation, P equal to average price level and T equal to total number of productions. So who derived this equation? Means Fisher. Again, important question for your examination. Now, and most important concept where they have asked many times, money supply. They have asked many times for examination, money supply. So now here M1, M2, M3, M4. M1 which represents currency held by public plus net demand deposit plus banks plus other deposit with RBI. Now M2 which represents M1 plus saving deposit with office savings banks. M3 which represents M2 plus net times deposit with saving deposit with post office savings banks, net time deposit with banking system. Then F4 which represents M3 plus total deposit with post office savings bank excluding NSC, National Service Certificate. NSC called National Service Certificate. Students, this concept is very important for examination. Here there are two. One is M1 and M4. M1 called narrow money, M4 called broad money. Okay, and M1 which represents currency held by public, net demand deposit plus bank plus other deposits with RBI. M2, M1 savings deposit with post office banks. M3 for this M2 plus net time deposit with banking system. M4 again M3 plus total with post office, total deposit with post office savings banks excluding NSC. NSC is called National Service Certificate. So in this concept, the money, what are the various theories of money and what are the various types of approaches? Cash balance approach, Cambridge approach, neoclassical approach, demand for money. What about the formula for demand for money? And K into PY, K which represents proportion of income that people wants to hold as cash into income. Income is nothing but Y. And quantity theory of money, P into T we have discussed. P is nothing but price level, T is called as transaction. Later Fisher's equation, MV equal to PT. MV equal to PT means MV, M which represent total amount of money in circulation, and P which represents transaction velocity of circulation, and P average price level, at last T total number of transactions. So these are the points very much important for the concept of money. Then later they will ask again another important concept is repo. It's nothing but repurchase transaction. Repo is called repurchase transaction. See, each and every concepts in the economics, instead of theoretical, the practically if you understood, then it is easy for you to mark the answers in case if they are going to ask the question in any ways. But for that, practical aspect is very much important. So what is meant by repo? It's a repurchase transaction. Repo is a money market instrument. Collateralized short-term money lending through sale, purchase, operation in debt instrument, whereas repo, other banks borrow money from RBI by giving securities to RBI. Reverse repo, this is another important concept. Reverse repo, RBI borrow money from banks by giving them securities. Now just see the difference. What is meant by repo? Repurchase transaction. Repurchase, it's a money market instruments, collateralized short-term money, lending through sale or purchase operation in debt instrument. But like this, they are given for you to understood a simplified language is, other banks used to borrow money from RBI. Yes, other banks used to borrow money from RBI. So just like that, the RBI, they cannot grant the loans and advances to the other banks. But for that, the RBI will expect some amount of securities. In such a case, these banks, they will give securities to RBI. So that's why it is called as money market. Collateralized is nothing but securities, only for short period of time, short term money, lending through sale, either they will sell or purchase, might be applicable. So repo, repurchase transaction, nothing but the RBI where they are ready to purchase. In case the other banks, those who want to borrow money from RBI, they can do so, provided they have to offer their securities to RBI. What is meant by reverse repo? Just opposite. Now repo we have discussed, opposite that repo, reverse repo. RBI borrow money from the banks by giving them securities. Now RBI will give the securities to the other banks. It is called as reverse repo. So repo and reverse repo rate, which is very much important in the recent days to calculate the national income, especially the expenditure method, as we discussed, C plus I plus G plus X minus M, which is the most important component under the expenditure method, means consumption. But to arrive that, to calculate such consumption, which one is very much important, means banks, they should offer the loans. But reverse rate as well as repo rate and reverse repo rate. Repo rate, which is very much important, the reason is other banks used to borrow money from RBI, but for that RBI will charge some interest. So during that time, let the banks, they have decided RBI will increase the repo rate. What will happen? RBI, once they increase the repo rate, all the other banks, they will decrease, okay, the amount of loan to be sanctioned to the public as well as the industrialist, those who want to do their business. Now what will happen? Since the RBI has given the instruction or restricted not to give high amount of loan, where the public, they won't borrow the loan, the consumption started to decrease. Since the consumption started to decrease, this may affect the GDP started to decrease. So suddenly central government will give the direction to the RBI to increase the currency notes. The circulation of money flow will be more. Then what will happen? Slowly the repo rate started to decrease. Now the other banks started to increase the loans. Once the other banks started to increase the loans, the industrialist as well as the public, they will come forward to take the loans. While they are coming forward to take the loans, slowly the consumption started to increase, production also started to increase, flow of the inflation increase, the level of circulation of money also started to increase, and GDP also will be increased. So everything for the expenditure method, the consumption is the foremost important component to calculate under the expenditure method. Same way the money supply, especially in money supply, the concept of repo and reverse repo with regard to the banking sectors, it plays a major role in order to analyze the GDP, which also have a good impact on to calculate the national income. The next one is budget. So even here the budget, it is very much important. Okay, but on what basis they will ask the question? Comparing to old syllabus, for the new syllabus there are 5 units what they have included. It is very much important for the practical aspects, especially for day to day life, even to bring new amount of policies by the government. Which one is most important chapters for your examination point of view? What we have discussed 1 to 5, which is comes under micro, but what we are discussing 6 to 10 exclusively going to deals with macroeconomics. So that's why here we are discussing about the budget. So budget, it is a statement. Budget is a statement that presents the details. It's a statement presents the details where money comes from and where the money goes to. In this budget, which includes document, this document apart from budget document, apart from budget speech, the document which represents AFS called annual financial statement. AFS called annual financial statement. Another one is demand for grant. Third one is finance bill, and the last one is statement mandated. Statement mandated under FRBM Act. So macroeconomic framework statement, medium term fiscal policy, and 9 other documents also to be add on under this macroeconomic medium term fiscal policy and 9 other documents. So in this there are 2 parts. One part A speech, part B speech. With the help of this diagram itself, I will explain the concept of budget. Part A deals with macro economic situation of a country plus budget estimate for next financial year. Next financial year. Part B deals with government progress of government, various department measures either on policies or on tax. So here what is meant by budget? Budget is a statement which shows where money comes from and where money goes to. It's nothing but revenue receipts as well as the capital receipts, revenue expenditure as well as capital expenditure. Apart from this budget concept, then these four headings are very much important, called as sources of revenue. Under revenue receipts, there are two. One is tax revenue and not tax revenue. Again, capital receipt. Again, two. One is debt receipt and non-debt capital receipts. Then instrument of fiscal policy. Instrument of fiscal policy. Point number one, tax. Tax means again there are two tax. One is personal tax, another one is corporate tax. Next one, government expenditure. Under this government expenditure, current expenditure, capital expenditure, transfer payment. Then third one, public debt. Fourth one, budget. Even in the public debt, one is internal, another one is external. Another one is external. Now just see here. Now what is meant by budget? So as I quoted earlier, budget is a statement where money comes and where money goes to. It's a document. Budget is a document. Apart from budget speech, all these documents to be presented. One is annual financial statement. In detail, let you have to focus for your examination on these concepts. The meaning of AFS, annual financial statement, demand for grants, financial bill, statements, and other rest of the documents also to be included, okay, or to be presented along with the budget. So all these documents to be presented for the purpose of budget. And budgets, there are two important parts. One is part A. So what which represents part A? Part A used to represent macroeconomic plus budget estimated. Budget estimated for which year? Next financial year. So these two parts. Okay, part A. Part B, progress of government of various departmental measures. So exclusively part B deals with the government activities on various department. What are all the various policies enacted by the government, and what about the various tax measures to be taken, especially sometimes every year they might be bring some changes with regard to both the personal tax, direct tax as well as indirect tax, also to be included in part B. So here you will expect the question on the details of progress of government has to be made on various departmental measures with regard to future policies as well as government tax proposals used to come under dash parts of budget speech, part B. Macroeconomic situation of the country deals with the dash parts of budget speech. Then here part A. What are all the various important documents which is required to be attached, especially the major or most important document means annual financial statement, demand for grants as well as the financial bill. So these are the major documents to be attached. Apart from this, again, what are the various sources of revenue to be included? Revenue receipts. So here this part is very much important. Okay, examples. Tax revenue. Sir, can you give an example of tax revenue? Corporation tax, taxes on income, wealth tax, customs duties, GST, tax on union territory. All these are all the examples used to comes under tax revenue. Sir, what about here you have mentioned non-tax revenue. So can you give an example of non-tax revenue? Interest receipt, dividend, and surplus transfer from RBI comes under non-tax revenue. What is meant by debt receipt? Market loan for different purpose, either on short-term borrowings or treasury bill borrowings, securities issued against small savings are the examples used to come under debt receipt. So what are the examples of non-debt capital receipt? Recoveries of loans and advances comes under non-debt capital receipt. So like this, the debt receipts itself, capital receipts itself, there are two types, debt receipt and non-debt capital receipt. Each heading examples are very much important for your examination. Just now I have dictated each and every example. These examples let you out to understood. Say for example, interest receipt is an example used to comes under dash. A, tax revenue, B, non-tax revenue, C, debt receipt, C, D, non-debt capital receipt, means answer is non-tax revenue. Okay, like this you will expect the question. Same way, another example, GST is an example used to come under dash revenue, tax revenue. But the GST used to comes under the example of tax revenue, which is also comes under the category of A, revenue receipt. Capital receipt means, now just see, tax revenue used to comes under revenue receipt. Now you have to mark the answer revenue receipt. Okay, not only these two, these tax and non-tax used to come under dash receipt, revenue. Debt and non-debt used to come under dash receipt, capital receipt. Like this you will expect the questions for your examination. So be focused on source of revenue, including the examples, which is very much important. And the next one is instrument of fiscal policy. First one is tax. Now you know very well, tax there are two. One is personal as well as corporate tax. Government expenditures, transfer payment, already we have discussed the examples of transfer payment, current expenditures, capital expenditure. Public debt, there are two types of public debts. One is internal public debt, another one is external. Internal is nothing but borrowing from own people within the country. Internal is nothing but in case we have got the government is going to borrow the funds within the country, then it is called as internal public debt. External, outside sources, in case they are going to borrow outside sources, then it is called as external public debt. And last one, already we have discussed about the budget, where the various types of resources, the sources of revenue and expenditure made by the nation government in a year, it is called as budget. The budget which represents where money comes and where money goes to. So like this, the instrument of fiscal policy deals with, one is tax, another one is government expenditure, third one is public debt, fourth one is budget. So there are four major heads used to come under instrument of fiscal policy. Now the next one is international trade and trade policy as well as tariff. In this international trade, the most important point is for you to tariff. It is very much important concept for your examination. Tariff is nothing but customs duty is a tax or duty imposed on goods or services. So customs duty imposed on goods and services is called as tariff. But even here there is an important concept. You will expect some important headings for your examination. First one is competition ad valorem tariff. Second one is intention levy. Third one is trade distortion. Fourth one is agreement. arrangement. So all these are the various types. So competition means ad valorem tariff or compound tariff, mixed tariff, technical, tariff rate, quotas or mechanism. Okay, so even here we need to understood competition, intention, trade distortion, agreement or arrangement. All these used to come under which heading? Competition. Levy, it's a tax, variable, prohibitive, escalated. And trade distortion, another name for trade distortion is nothing but trigger price mechanism. Trigger price mechanism. So here this deals with the trade policy or international trade, deals with the people, whoever, those who are going to engage in doing the export or import trade. So especially we need to know about what is meant by trade policy. Trade policy means free trade, referred to a situation in which government does not attempt to restrict what if citizens can buy from or sell to another country. So free trade means where the people are eligible to do their trade very freely without any restrictions, where they can able to obtain certain goods from other country, same way they can able to sell certain goods to other countries. So this concept is called as free trade policy. With regard to free trade policy, there are various types of tariff also which will be used to included, but for that, just like that, you cannot engage in doing the trade policy, but for that you have to pay the duty. That duty is called as customs duty. It's a form of tax are imposed on various goods and services, either the people those who are engaging in doing the import business, as well as the people those who are engaged in doing the export business or import business. But for that, this international trade which plays a major role, but for that again, for this there is a trade negotiation. Another heading, trade negotiation. So what is meant by trade negotiation? Trade negotiation is nothing but nations meet together to discuss possibility of trade, to discuss possibility of trade with a goal of reaching trade agreement. Now they will ask the question, what is meant by trade negotiation? Okay, so there are two parties used to meet together to discuss the possibility of trade with the goals of reaching a trade agreement is called as dash. Either free trade policy or trade agreement or negotiation or all of the above, means answer is trade agreement. Trade agreement is nothing but the various nations used to meet together to discuss on the possibility of trade with regard to both export and import. Especially at last they should finalize with what type of agreement? Trade agreement. So in this trade agreement, for this trade agreement there are various types of trade. Here you will expect the questions for examination. Types of trade agreement. Types of trade agreement, you will expect the questions. One is unilateral, another one is bilateral, another one is multilateral, another one is plurilateral. Sir, what is the meaning for unilateral, bilateral, multilateral and plurilateral? Okay, so this part again important. Importing country offer certain incentives to encourage the export country. Okay, so in one country where they are giving some incentives to in order to encourage, which one to be encouraged by any nation means for export. So here unilateral, they are not focusing on both, they are focusing by providing some incentives, engage the country to do on what business means export business, called as unilateral. Bilateral means two nations at a time, okay, where they used to go on with trade nations between each other. So both the countries, they used to discuss on each other exclusively to arrive the trade agreement. It is called as what? bilateral. Two nations, favored trade nations, used to discuss to do the trade between two countries between each other is called as bilateral. Multilateral, many nations at one time. Multilateral example WTO, World Trade Organization agreement, whereas all the multinations at one time they used to engage in the trade agreement. Plurilateral means agreement between this plurilateral agreement between more than two countries. More than two countries is called as plurilateral. Now just see, unilateral means one country, bilateral means two countries, multilateral means many nations at one time, and plurilateral means two nations. So like this, the people where they have to engage themselves in order to execute the trade agreement exclusively to engage themselves again with regard to what means either in export or import, in order to bring some good cooperation between the nations, especially to promote export business compared to the import. Another one is FDI and FPI, again very much important. Foreign direct investment. Another one is foreign portfolio investment. So what is the difference between foreign direct investment as well as foreign portfolio investment? Foreign direct investment, the process in which the product of one country is nothing but home country, acquires ownership of an asset, acquires ownership of an asset in another country called host country. Okay, either through ownership or control or management asset in host country. So this process is called as foreign direct investment. Same way, foreign portfolio investment, the process in which the resident of one country called home country acquires ownership to, one is financial assets, another one is securities in country called host. Now just see the difference between these two. FDI, foreign direct investment, FEI, foreign portfolio, here foreign direct investment. Now just see, one country called home country acquires ownership or control or management in the another country. So one country acquiring the ownership, control or management asset in host another country is called as foreign direct investment. What about the meaning of foreign portfolio investment? Resident of one country is nothing but same home country acquires ownership either in the form of financial assets or securities in another country. Another country is nothing but same host country. Now just see the difference between these two. One is the direct investment. Portfolio is nothing but financial assets and securities acquired in other country is called as foreign portfolio investment. So here there are various types of FDI. Inside these types of FDI, one is horizontal, another one is vertical, another one is conglomerate. And also another important concept is foreign exchange market. Foreign exchange market. Now just see horizontal. So what is the meaning of horizontal? FDI used to invest in same industry abroad. in the same industry abroad, then it is called as horizontal. Related industry, FD in a related industry, which means which used to provide raw materials, input, services to the investor's business in home country. Say for example, publish of books based in Europe, accused printing facilities firms in USA. So related industry abroad, then it is called as vertical. FD in a business that is unrelated to the investor existing business, conglomerated. First one is here same, here related, here unrelated. Okay, so here you have to know the difference between the types of foreign direct investment, the horizontal, vertical, and the another one is conglomerate. What is the meaning of foreign exchange market? Say electronically linked network of banks or dealers who used to buy as well as sell the foreign exchange market. Okay, both shares. Okay, they used to buy shares as well as sell shares. Okay, foreign exchange market. The currency can be exchanged. Currency rate can be exchanged. Okay, so here currency exchange, say X is a person, even those who want to acquire the shares from foreign company, there is no other way, they have to convert their Indian currency into foreign currency or foreign currency to be converted into Indian currency, but for that which one plays a major role is foreign exchange market. So any person, those who are having any commodity, he decided to do the trade to exchange with any other countries, during that time they have to convert their own currency into other countries' currency. It is called as foreign exchange market. So here both category of group of people used to apply. One is buyer, another one is seller. So in this foreign exchange market, you will expect the question on fixed, floating, spot, and another one is forward market. What is meant by fixed? And announced by a country's central bank or government. The government is fixed for each and every transactions. This is the rate. Then it is called as fixed. Floating, based upon the demand and supply, the currency rate used to do goes on with some amount of changes, called as floating. Spot, current transactions which involves immediate delivery. Spot transactions if you are doing, then it is called as spot market. Contract to buy or sell currency is not for present, for the future delivery, where you have engaged in doing the business and exclusively for buy or sell currencies, not for present, for the future, then it is called as forward market. So here there are four. One is currency rate, which is fixed by the central bank or government, based on the depend upon the market, the currency rate. Okay, the demand for supply of currency used to change, depend upon the market, is called as floating. Currency transactions involved in immediate delivery is called as spot market. Forward market, contract engaged by the group of people, especially with regard to buy or sell currency, not for the present, for the future, called as forward market. So there are four categories used to come under foreign exchange market. Then the next one is Indian economy. Indian economy, here one is liberalization, economic reforms are important. So what are liberalization? One is industrial sector, financial sector, foreign trade sector, then fiscal policy. Now just see here, under liberalization, industrial, financial, foreign trade, fiscal policy. Industrial, dominant position to public sector. Dominant position to which sector? Public sector, called industrial. Second one, financial sector. Financial sector, banking sector. Foreign trade, protecting domestic industry. In foreign trade, protecting domestic industry. Fiscal policy, high level of government expenditure or insufficient government revenues, high level of government debt, high rate of income tax. Fiscal policy deals with 4. Point number 1, high level of government expenditure. Point number 2, insufficient government revenue. Point number 3, high level of government debt. Point number 4, high level of income tax. All these 4 which represents the fiscal policy. And apart from this, now here in the liberalization of economic forum, economic reforms, I have mentioned there are 4 types of sector. One is industrial, financial, foreign trade. 4th one, fiscal policy. Fiscal policy which includes, there are 4 important points: high level of government expenditure, insufficient government revenue, high level of government debt, and high level of income tax, which influencing the liberalization and economic reforms of our Indian economy. And the next important point for your examination in last chapter, okay, shortcomings of economic reforms. So what are shortcoming? GDP at growth rate, then fiscal discipline, 3rd one infrastructure growth, 4th one foreign trade measure, then other measures. So shortcoming of economic reforms. Let you have to know GDP at growth rate, fiscal discipline, infrastructure, foreign trade measure, other measures which influencing the shortcomings of economic reforms. So they will ask the question, shortcomings of economic reforms which includes A, infrastructure growth, B, foreign trade measures, C, fiscal discipline, D, all of the above. Now answer is all of the above. So in such a case, all these headings are very much important to remember, okay, for the concept of shortcomings of economic reforms. Now the last one is, this concept is Niti Ayog. It's a government initiative. So with regard to this, you will expect the question, this concept enacted in the year Jan 2015, okay, namely Planning Commission was replaced by National Institution for Transforming India. National, N which represent national, I which represent institution, T which represent transforming, I which represent India. Okay, Niti Ayog, National Institution Transforming India, replaced Niti Ayog, earlier apex policy making body, namely called Planning Commission. This Planning Commission only replaced by National Institute for Transforming India, Ayog. Okay, so here this concept is very much important. At last, there are 4 H's is to be analyzed. One is policy and programming framework. Another one is cooperative federalism. Third one is monitoring and evaluation. Last one is think knowledge innovation hub. So there are 4 heads presented. One is policy and programming framework, cooperative federalism, monitoring and evaluation, think knowledge and innovation hub. All these are the various concepts which are required to be go through for your examination point of view in detail. As the concept what we are discussing, how to approach the economics for CAI Foundation with regard to paper 4, business economics for CAI Foundation. On this there are totally 10 chapters. Previously we have completed 5, and today's session determinants of national income, public finance and money market. There are 4, M1, M2, M3, M4, the money supply and demand for money, and international trade, the free trade policy, a trade negotiation as well as trade agreement. Then we have discussed with the various types of foreign trade and foreign trade as well as foreign portfolio investment. At last the Indian economy, the meaning of Indian economy, the policies of Indian economy and liberalization and economic reforms, shortcomings of the economic reforms, Niti Aayog, the recent government initiative, as I quoted, it is very much important. And at last what the 4 aids which is required to be presented for the purpose of analyzing the economic of our country, policy and programming framework, cooperative federalism, monitoring and evaluation, and think knowledge, and last and foremost important thing is innovation hub, which is required to be presented and to promote for the purpose of economic development of our country. With regard to this, that I am going to conclude my session on how to approach economics on paper 4 for CAI Foundation. All the best, do well. Thank you all for attending the session. Thank you.